Just like how cars need gas to run, stocks need institutional investors to get anywhere. Tracking the institutional investment power behind a stock is crucial to determining whether it could become a true leader and whether it's worth adding to your portfolio. As individual investors, we typically lack the buying power it takes to drive a stock into new high ground, but big institutions such as mutual funds, banks, and pension funds do possess such power. Since they control most of the market, once they like a stock, they'll spend weeks, months, or even years building a large position, and this will cause the share price to climb. What's more important is that when these institutions start buying, it shows up in the stocks chart and in various indicators made to track institutional support. Institutions aren't required to publish their specific investment choices and stock picks for all to see in real time. They may reference a specific industry group, but they usually keep the specifics on the down low aside from quarterly disclosures, and that's a lot of lag time. Lucky for us, we've developed multiple backhanded ways to tell if institutions are buying or selling a stock. There are several indicators we check to determine if a stock has institutional support, including up-down volume ratio, support at key moving averages, and a stock's accumulation distribution rating. So let's dive in and look into each of these indicators in greater detail. First, a stock's up-down volume ratio is a great way to identify if a given stock is under accumulation. The ratio, which can easily be identified using IBD's charting tools, divides the total volume on up days by the total volume on down days. A ratio above 1.0 points to positive demand, or more buying, while a ratio below 1.0 suggests negative demand. The ratio pays attention to the last 50 days of trading. As you may have assumed, heavy volume gains and low volume declines will improve the ratio, while heavy volume declines and low volume gains will hurt the ratio. Using IBD's charting tools, we can see the up-down volume ratio appears in the left side panel on the weekly chart. In January 2024, Stride showed a very strong up-down volume ratio of 2.6. We can see how the stock underwent several strong up weeks in heavy volume, both leading up to its breakout and after the breakout occurred. Our second institutional support indicator is when a stock gains or retakes support at a key moving average, such as the 50-day or 200-day line. It can be a strong sign that the stock is garnering support from institutions. An important caveat to take into account is the volume behind the stock's move. A move above the moving average in heavy volume is what we're looking for. The 50-day moving average is one of the most widely followed technical indicators. You may be wondering why this magical line works so consistently across all stocks as a universal point of reference. Major institutions often use the 50-day line as a point of reference for entries and for adding to their positions when a stock pulls back to the line. This institutional buying then creates upward pressure or support to help keep the stock price above that moving average. Conversely, the line also acts as an area of resistance when a weak stock is trading below it. Once below that line, market forces create a level of downward pressure, and this makes it really difficult, though not impossible, for a stock to climb back above it. This is because institutional investors are now using the line as a sell level instead of a buy level. Once a stock has collapsed below its 50-day line in heavy volume, you can be sure it won't be able to reclaim that level without a fight. Stocks need the muscle of institutional buying power to get back above their 50-day lines. The third indicator we're looking at is a stock's accumulation distribution rating, which measures the amount of institutional buying and selling in a stock over the past 3 months. Using a proprietary formula, stocks are rated on an A+ to E scale. A+ means heavy institutional buying, E indicates heavy institutional selling. Naturally, heavy volume up days help the rating, while heavy volume down days will hurt it. To locate a stock's accumulation distribution rating, you can find it on a stock's daily or weekly chart using IBD's charting tools. Let's take a look at a quick example using a breakout from 2018. TransUnion maintained an accumulation distribution rating of A and B in nearly all the 57 trading days it spent basing. In late January to April 20th, 2018, when it finally rose to a new high of 67.32. The weeks ended February 16th, March 9th, and March 16th showed gains in heavy volume, signaling there was major fund buying occurring while the base took shape. The stock managed to travel as high as 75.99 before forming its next base. Now that we've explored 3 distinct ways of determining a stock's institutional support, it's time to put them into practice. Be sure to use these tools in your regular research to help you determine if you're looking at a true market leader or just a laggard in leader's clothing. And remember to regularly check up on the stocks in your portfolio to be sure they aren't slipping in the area of institutional support.